In this video, I'm going to be talking about Goldstone Resources, a company that I'm invested in. It's fast-tracking its gold production at the Acquacary Hamasi Project in the world-class Ashanti Gold Belt in Ghana. I think it's a golden opportunity. I've been investing in the company for a while. You can see my research note on the company on spunshare.com. Else, I'll give you a quick overview in this video. So, who's running the company? Well, it's a team that have done it all before. Bill True, the non-exec chairman, he was the former CEO of Oxus Gold. He's brought 3 new mines into production, and he's the chairman of Paracel Gold as well, who's one of Goldstone's largest shareholders. CEO Emma Priestley, she has over 20 years experience in mining and infrastructure services. She is the CEO. I've spoken to her a couple of times on the podcast and will be doing so regularly in the future. Angie List, non-executive director, she's owner and director of BCM Ghana, and that's another one of Goldstone's largest shareholders. On that subject, in terms of capital structure, there's only a 38% free float, and that's because the majority of the share capital is actually locked up with 3 of the main holders being AIMS, Paracel and BCM. The company's got a 48 million market cap, which, if you consider that phase 1 annual projected free cash flow should be around 40 million, then it's quite an interesting market cap level versus the free cash flow projection, given that they should start producing gold in Q3. They've got 4 million debt, so it's a fairly low geared company. Lots of other gold miners have got a lot more debt for the amount of production that Goldstone are going to be doing. The company has 2 projects. It has Hamasi and Akrokeri. Hamasi is, if you like, the flagship project, and it's open pit, low cost, and it's a high margin mine. The phase 1 initial 5-year mine operation should scale up to around about 50 to 70,000 ounces per annum when they get into full production. Significant upside, including other pits and exploration. So the Hamasi trend itself just keeps on going. It's obviously in a very prospective part of the Ghana gold belt, and the broker forecasts around 88 million per annum in EBITDA from year 2 and $56 million per annum in free cash flow once full capacity is reached. And this is just at the initial Hamasi South operation. There are other pits, as I mentioned, Hamasi Main and Hamasi North, and the trend keeps on going. So they've got an updated DEP to come and a JORC resource to come. I expect the current 600k ounce JORC resource will increase significantly, not least because there is historic drilling, recent drilling, and additional data that the company have been looking at to be factored into that JORC resource. So it's quite possible that could just come in, shy or over 1 million ounces. Mining has already commenced last quarter, and first gold pour is due Q3 2021. And if you just look on the right hand side there, you can see where Hamasi and Acquacary sit in relation to other gold mines in the region. So, Acrokeri, well, this was a previously operating underground mine. It was shut in 1909 due to an ingress of water. It produced 75,000 ounces of gold between 1904 and 1909. It was a very high grade with 24 grams a tonne average recovered grade. So these are huge grades when you consider a lot of gold projects are mining grades, of less than 2 grams a tonne, and they're, financially viable. There's high-grade quartz veins there with grades of up to 1 ounce a tonne historically mined. So again, very high grade. The plan here is to refurbish and reopen the mine, and again, there's exploration upside. So as I touched upon on the last slide, it really is about location, and the postcode. You can see where Hamasi and Acquacary sit in relation to the Obuasi mine. That's a 70 million ounce monster, and then there's plenty of other mines around there that are multi-million ounce gold mines as well. Hamasi and Acquacary really are just in the middle of them all, so the upside here could be huge. I think that Goldstone are going to pretty much define a multi-million ounce resource going forward, but it's obviously early days and we shall see. So what does the house broker say? Well, based on the initial Hamasi mine production profile, which is the phase 1 plan, they've got they estimate a post-tax NPV of 139 million, and that's equivalent to 24.4p per share today. Now, this is just the phase 1 initial operation. remember there are there are additional pits, there's additional exploration, so this is just the original phase 1. So this excludes upside from the additional Hamasi pits, it excludes upside from additional exploration along the Hamasi trend, and of course it excludes upside from opening up Akrokeri again with those huge grades. You can see there from the table, from the broker note, we've got some significant numbers. So obviously if they start producing this quarter, as we're now in Q3 2021, initial free cash flow projections are going to be around about 18 million, but going into next year and the years after, we're talking about 55 million in free cash flow. Remember, this is a 45 million market cap company. So where are they at and where are they heading? Well, Hamasi is fully permitted. It's got its exploration license in place as well. Mining commenced in May 2021, and we've got first gold pour expected this quarter. So we should be, getting some news on that, hopefully imminently or soon. They've got to make a decision whether to sell gold in carbon or progress their own elution plant and produce their own doré bars. That'll be just down to looking at what third-party options are available given their location, and whether initially it's cheaper just to take a discount on the gold price and sell them the gold in carbon, and then just build their elution plant maybe 3-6 months down the line. However, they may just opt to do that sooner. We've got an updated DEP to come, definitive economic plan, and this should show the enhanced phase 1 economics, given that we've had further drilling results and that they're now planning to mine a greater depth, and of course gold price has been on the up as well. We've got an updated JORC resource, as I mentioned earlier, to come as well. That needs to factor in the historic and recent Hamasi drilling. There's plenty of data interpretation that they've been doing as well, as Emma's mentioned on the podcast, so we should get an updated JORC resource. And we've got obviously Hamasi drilling and exploration plans as the company plan to further explore and expand the resource. And then we've got the reopening of the Akrokeri underground mine. So why Goldstone then? Well, the gold market, the time is now. There's plenty of coverage on social media, Twitter, in the news about gold, and obviously inflationary pressures. So many people think it's a good time to be getting into gold, and obviously the leverage that gold miners can provide over and above owning gold itself. They've got excellent projects with significant upside. They've got a proven management team. They've got skin in the game. We've seen that, only 38% free float. And it's a growth story in terms of they can grow organically. They're going to be generating plenty of free cash flow, and even potentially pay a dividend in the future. It's a growth story. The current 45 million market cap versus the free cash flow generation and the potential from exploration upside, to me, makes it very attractive at this level, and pretty much probably at the ground floor entry. Right time, right place. Gold juniors are, as I said a minute ago, an interesting investment at this juncture, especially ones that are near-term cash flow generating and can provide you with leverage upside. I like to just draw a comparison with a company I was invested in recently, Sylvania Platinum. A few years back, they went from 6p to 137p, and they were in the same sort of sweet spot, as I put it, where they were just started to become cash flow generative. And I think I'd made 100% on my 6p and was happy with that, and didn't really have enough experience behind me to realise that probably the re-rate was only just about to start. And again, it's when companies become cash flow generating that this can happen. So if I'd have kept my 5k, say for example, in at 6p just a few years ago, and that's how short time frame we're talking about, my investment then could be worth today £115,000, 23 bagger potential. So it's something to think about, as long as Goldstone can deliver. So thank you very much for listening to the video. I hope you enjoyed it. Look out for more investor videos on my website, spongeshare.com.